In this video, I'll break down what a downtrend really is, how to identify it correctly on the chart, and how to know with confidence when sellers are truly in control of the market. You will learn the exact market structure sequence I use, how to identify a downtrend, and how it forms on the charts, what are lower lows and what are lower highs, why they matters, and how to stop selling in the wrong direction. And by the end of this video, you'll be able to look at any chart and identify a downtrend in a sequence. No indicator, no guessing. But before we talk about strategies or entries, you must first understand market direction before thinking about selling. Once you understand this, your trading decision becomes clearer and more confident. Let's dive in. If you don't know the trend direction, every trade you take is already in the wrong direction. Today, I'll show you the simplest way to know if the market is in a downtrend in a second. That leads us to the topic. What is a downtrend? A downtrend happens when the market keeps making lower high and lower low. This means support levels are breaking to the downside, and it tells us one thing clearly: sellers are in control. Every time price breaks to go up, seller steps in and push it down. But as simple as this may sound, not every trader can interpret this on the chart. Think of the market like a river flowing down the hills. Each time the water tries to flow back up, gravity pulls it down. If you don't see the market flowing down, you are not in a downtrend, and selling would mean fighting the current. But before thinking about entries, order block, or any strategy, you must first understand market direction. If the market is in a downtrend, sellers control the market. Once you understand the flow, everything else in trading starts making sense. To fully understand price behavior in a downtrend, you must clearly understand lower lows and lower highs. These two structures tells us who is in control of the market. So now, let's break down what a lower low and a lower high really means. A lower low is formed when price breaks below the previous low. That means price is breaking support to the downside. This tells us sellers are strong, breaking the lows, and this is very important because it confirms that sellers are in control of the market. What is a lower high? A lower high is formed when price pulls back but fails to break above the previous high. This tells us buyers are weak and sellers are still defending the level. With that being said, I will show you how lower lows and lower highs are being represented on the chart. Before going into the chart analysis to show you how I identify a downtrend, I will first explain a lower low and a lower high using the mechanical approach so you can identify once I go into the chart. Once I open up a chart, I identify a high, which is this resistance. The next thing I do is look to the left for the most recent low, which is this spot. Sometimes you can see a chart pattern like a double top and ABC. So let's assume price is giving us a double top, which means price is not able to break this resistance. The next prediction for price is to try and break this low. Once price breaks this low, that represents. So from this place to this place, breaking this support level is called a lower low. Then from that point where the price stops and pulls back to this place is called a lower high. So you must understand this formation. This point breaking the recent support to this point from here to here represents the lower low. Then from here to here represents a lower high. So you must understand that. So now that is out of the way, let's go into the chart analysis of far. When I identify a high, which is this point, the next thing I do is look to the left for the most recent low, which is this point. Price has to break this low to confirm the presence of sellers. If this happens, it means that the market is transitioning from a buy market to a sell market. That information is very important to confirm the presence of sellers in here. This is the first signal that the market may be turning bearish. But the break alone is not enough. Price has to break and close and pulls back to this point, but not breaking this high, and immediately reversed by breaking the new lows to the downside. This is the confirmation that the market has turned from a buy trend to a sell trend. So anything I do from this point is going to be selling and not buying. Now that this is out of the way, let's connect to the real market. I'm choosing a random high on Great Britain USD. Now let's connect this to a real market. I'll be using Great Britain USD in replay mode so you can watch the structure form in real time. We have a high, which is this point. I'm just choosing a random high on the chart for this explanation. But if you want to do it live, it's the same thing. Once you can identify a high, a major resistance. Just like I explained earlier, I look to the left to find out the most recent low, previous support. But at this point, it's not clear. So I'll play the chart forward so we see what happens. Now, it's obvious. You can see the recent support that is being broken. Once that is confirmed, price break and close below the support. This is an early bearish sign. Then price pulls back before breaking another low. Once this low breaks, that's a confirmation that sellers are fully in control of this market. Let's watch and see what happens. As I said, price broke the first low, which is this. It's an early sign that sellers are coming back. Then when price pulls back up, it's very important to know that it must not take out the side. As long as this place is respected after pulling back and did not take out the side, then before breaking the recent low, that's a full confirmation that anything I'll be doing on this chart is going to be selling and not buying. However, there's a caveat here you must understand. If price breaks this high and close above this high, this is a signal that buyers are taking over this chart. So what you need to do is just stay away and look for a buy setup. But if this resistance is respected, that means buyers are still active. So you must understand that. Notice how it respects the previous high instead of breaking it above. Then price pulls back. Watch what happens. Price breaks and closes below the support. This is an early bearish signal. Then price pulls back. Notice how it respected the previous high instead of breaking above it. That tells me sellers are defending this very level. From there, price drops again and creates a new low. This confirms that sellers are now in control of this market. However, there's something I need to bring to your notice. If price takes out this high, it means that buyers are back in control. So you must watch out for that. This is the exact same sequence you learned mechanically. Now you are seeing it live on the chart. I'll play the chart forward so you can see how it plays out. Think of a downtrend like a staircase going down. Watch how price is breaking lows to the downside. As long as the recent high is not taken out, the trend is still bearish. Each step down is a lower low, sellers winning. Each pullback is a lower high, a pause before the next drop. If the market is not making lower lows, the sellers are not in control. Don't sell. Let's recap. Price drop, lower low. Price pullback, lower high. Price drop again, lower low. As long as this sequence continues, the downtrend remains valid. As long as the market keeps making lower highs and lower lows, sellers controls the market. Your job is to follow the flow, not fight it. Welcome to Palmist Global, where trading is made simple and clear. If this video helped you understand downtrend, hit the subscribe button and share the video with a trader who is still struggling to read the market direction. In the next video, I will show you exactly how I enter the trade using smart money concept based on this same understanding of trend. I hope to see you in the next video. Thanks for watching.